In just a few years, cryptocurrencies have gone from being new digital ideas to being trillion-dollar tools that could change the way the world's financial system works. Bitcoin and hundreds of other cryptocurrencies are being used more and more as investments and money to buy things like software, digital real estate, and even illegal drugs. For people who like cryptocurrencies, they are a way to make money generation and control less controlled by central banks and Wall Street. Critics, on the other hand, say that the lack of rules for cryptocurrencies gives criminals, terrorists, and rogue states more power, while the assets themselves increase inequality, have very volatile markets, and use a lot of electricity. Around the world, the rules are very different. Some countries support cryptocurrencies while others ban or limit their use. As of February 2023, 114 countries, including the United States, were thinking about starting their own central bank digital currencies, CBDCs, to fight with the rise of cryptocurrency. What are cryptocurrencies? Cryptocurrencies are called that because they are made with the help of cryptography. They are usually traded on open computer networks between people who have virtual wallets. These events are written down on public ledgers called blockchains that can't be changed. This open-source system makes it hard to make copies of coins and gets rid of the need for a central authority like a bank to verify transactions. Bitcoin, which was created in 2009 by the fictitious software expert Satoshi Nakamoto and has a market capitalization of over $1 trillion at its peak, is by far the most popular cryptocurrency. In the past few years, there have been a lot of new cryptocurrencies like Ethereum, which is the second most famous. Users send money from one digital wallet address to another. Then these transactions are put into a string of numbers called a block and approved by the whole network. Blockchains don't record users' real names or actual addresses. Instead, they only record transfers between digital wallets. This gives users some anonymity. Some coins, like Monero, claim to be more private than others. But if someone finds out who owns a wallet, their activities can be tracked. Miners earn bitcoins by putting these blocks in order and validating transactions on the network. This is done with a method called proof of work, which is based on computers solving math problems. This method is used by many cryptocurrencies, but Ethereum and a few others use something called proof of stake instead. In the case of Bitcoin, every 10 minutes a new transaction block is added to the chain. This is when new Bitcoin are given out. Over time, the reward slowly gets less. The number of Bitcoins that can ever be made is limited to 21 million. This is not true for all cryptocurrencies. Bitcoin and many other cryptocurrencies have prices that change based on how much people want to buy and sell them. But the value of some cryptocurrencies is always the same because they are backed by other assets. These are called stablecoins. Even though these coins tend to be pegged to a traditional currency, like $1 per coin, many of them were knocked off their pegs in 2022 when there was a lot of instability. Why are they popular? Once thought of as a side interest of tech evangelists, cryptocurrencies, especially Bitcoin, have exploded in fame and are now worth trillions of dollars. In November 2021, Bitcoin's price jumped for the first time to more than $60,000. It had gone down to $23,000 by February 2023. NBC News polls showed that by the middle of 2022, about 20% of people in the US had invested in, traded, or used cryptocurrency. Different currencies have different appeals, but cryptocurrencies are popular because they are decentralized. This means that they can be transferred quickly and anonymously, even across borders, without the need for a bank that could stop the transaction or charge a fee. People who don't like the way their governments run things have used Bitcoin to get money and avoid state control, such as to avoid US sanctions on Russia. Some experts say that digital assets are mostly business tools. Sebastian Malaby, a CFR senior fellow, says that people buy cryptocurrencies because they think that their value will go up in the future because a new future is being built on the blockchain. As the last year has shown, it's a very risky bet. Some experts say that the wild price changes of Bitcoin and other cryptocurrencies make them less useful as a way to make transactions. Most buyers and sellers don't want to take something as payment whose value can change a lot from day to day. Still, some companies will take Bitcoin. Bitcoin is often compared to gold because many investors see it as a speculative object to hold over time instead of using it to pay for things. Some people see Bitcoin as a way to protect against inflation because the supply is always the same. This is different from fiat currencies, whose supply can be increased forever by central banks. But after the price of Bitcoin fell in 2022 when the stock market was unstable, many experts questioned this theory. Other cryptocurrencies can be harder to explain in terms of their value, but many of them are tied to bigger projects in the digital asset industry. Some cryptocurrencies like Dogecoin were made as jokes, but they have kept their value and high-profile buyers have bought them. Bitcoin has become popular with political leaders in countries where the currency has been weak in the past. This includes several Latin American and African countries. El Salvador made headlines in 2021 when it became the first country to make Bitcoin a legal form of currency. This means that residents can pay taxes and settle debts with Bitcoin, but the move has caused protests. Some politicians in other parts of the area have said that they agree with the plan. Experts say that stablecoins could compete with traditional currencies to become the most common way to pay. Their value is pretty stable, and they can be sent right away without the transaction fees that come with credit cards or services like Western Union that help people send money abroad. Stablecoins can also be used by anyone with a smartphone. This means that millions of people who don't have standard bank accounts could join the financial system through them. But officials are paying more attention to them now, especially after several stablecoins fell below their $1 pegs during the market volatility of 2022. What is DeFi? With the help of cryptocurrencies and blockchains, a new group of decentralized finance, DeFi companies and projects have sprung up. DeFi wants to give people access to financial services like borrowing, lending, and trading without the need for traditional companies like banks and brokerages, which often charge high commissions and other fees. Instead, smart contracts make sure that transfers happen automatically when certain conditions are met. Investors are pouring tens of billions of dollars into the DeFi business because it is becoming more and more popular. The Ethereum Blockchain is used to build most DeFi apps. Experts say that because blockchain technology is good at keeping track of transactions, it could be used for more than just cryptocurrency. For example, it could help with real estate deals and foreign trade PDF. What challenges has this created? Cryptocurrencies have also given governments a new set of problems to deal with, such as worries about criminal activity, damage to the environment, and public safety, things that are illegal. In the past few years, hackers have been using ransomware attacks more and more. In these attacks, they break into computer networks, shut them down, and then demand payment, usually in cryptocurrency, to get them back up and running. The most recent yearly report from the U.S. Drug Enforcement Agency, DEA, says that drug cartels and people who launder money are also increasingly incorporating virtual currency into their operations. Authorities in the US and Europe have shut down a number of so-called darknet markets. These are websites where people can buy and sell illegal goods and services, mostly drugs, using cryptocurrency. Critics say that these attempts to enforce the law haven't been enough. As an example, in 2022, a North Korean hacking group stole more than $1 billion in cryptocurrency. Terrorism and getting around penalties. Because the US dollar is the most important currency in the world, the US has more power than any other country to apply crippling economic sanctions. But Iran, North Korea, and Russia are using cryptocurrency more and more to get around US bans. Terrorist groups like the self-proclaimed Islamic State, Al-Qaeda, and the military arm of the Palestinian group Hamas also trade in cryptocurrency. The environment is bad. Bitcoin mining uses a lot of energy. Right now, the network uses more power than a lot of countries. This has made people worry that the cryptocurrency is making climate change worse. Cryptocurrency supporters say that this problem can be fixed with renewable energy. For example, the president of El Salvador has promised to use energy from volcanoes to mine Bitcoin. The move to a proof-of-stake approach, which uses less energy, is said to have been done out of concern for the environment, instability, and a lack of rules. Due to the fast growth of cryptocurrencies and DeFi businesses, billions of dollars are now being traded in a sector that isn't very regulated. This raises concerns about fraud, tax evasion, cybersecurity, and the safety of the economy as a whole. If cryptocurrencies become the most common way to send money around the world, it could make it harder for central banks, especially those in smaller countries, to set monetary policy by controlling the amount of money in circulation. In 2022, several popular cryptocurrencies lost value because of how volatile they were. This made it hard for a few crypto companies to pay back their loans, which were mostly other crypto companies. Many lenders and customers went bankrupt, including FTX, which at the time was the third largest cryptocurrency exchange in the world. Investors lost tens of billions of dollars when FTX and other firms went out of business, but traditional financial companies were mostly unaffected. What are governments doing about this? Many governments haven't gotten involved with cryptocurrencies, but their rapid rise and change, along with the rise of DeFi, have caused regulators to start making rules for this new sector. Regulations are very different in different parts of the world. Some countries support cryptocurrencies, while others ban them completely. Experts say that the challenge for regulators is to make rules that limit standard financial risks without stifling new ideas. In the United States, policymakers have said that they are slowly taking steps to control cryptocurrencies and the new DeFi sector. But cryptocurrencies don't fit nicely into the rules that are already in place. This creates confusion that lawmakers will probably have to clear up. Gary Gensler, the head of the U.S. Securities and Exchange Commission, SEC, has called the Bitcoin market the Wild West and asked Congress to give the SEC more power. Both Jerome Powell, the head of the Federal Reserve, and Janet Yellen, The Secretary of the Treasury have said that stablecoins need stricter rules, but officials have been hesitant so far to give crypto investors the same protections like deposit insurance that are common in more traditional finance. Christopher J. Waller of the Federal Reserve Board of Governors said in 2023, "If you buy crypto assets and the price goes to zero, please don't be surprised and don't expect taxpayers to pay for your losses." Authorities have been going after companies that let people change cryptocurrencies into US dollars and other national currencies. This is to stop people from doing illegal things. Under pressure from officials, big exchanges like Coinbase, Binance, and Gemini follow Know Your Customer and other rules meant to stop money laundering. In the meantime, law enforcement and intelligence agencies have learned to use blockchain to analyze and track criminal behavior. This is possible because most cryptocurrencies can be tracked. For example, the FBI was able to get back some of the money that was paid as a payment to the Colonial Pipeline hackers. In August 2022, U.S. Treasury Department said it was going to crack down on cryptocurrency mixers, which criminals can use to hide their activities on the blockchain. The Treasury Department called cryptocurrency mixers a threat to U.S. national security. China, which does most of the Bitcoin mining in the world, has taken strong steps to stop cryptocurrency. In September 2021, the Chinese government said that all crypto trades and mining would be illegal. This caused the price of some cryptocurrencies to drop sharply right away. The U.S. Law Library of Congress says that 8 other countries have banned cryptocurrencies: Algeria, Bangladesh, Egypt, Iraq, and that dozens more have tried to limit the use of digital assets. Still, most states have so far only done a few things. What is a central bank digital currency? Many central banks, including the U.S. Federal Reserve, are thinking about making their own digital cash called a central bank digital currency, CBDC, as a way to show that they are independent. CBDC supporters say that they will have the speed and other benefits of cryptocurrencies without the risks. CBDCs are being looked into by dozens of countries, which together make up more than 90% of the world economy. CBDCs have been fully put into place in 11 countries. All of them have low incomes and 10 of them are in the Caribbean. China is expected to make its CBDC trial program available to all of its more than 1 billion people by the end of 2023. This is because China has been testing a digital yuan since 2019. There are rumors that Fed leaders in the United States don't agree on how important it is to have a digital dollar. Experts say that interest in CBDCs grew in 2019 when Facebook said it would make its own digital currency called Libra, which could give its more than 2 billion people a new way to pay. Since then, the company has cut back on the project, which is now called Diem. China is also a driving force. Experts say that a digital yuan could give Beijing even more power over its economy and people, as well as threaten the US dollar's position as the world's favorite reserve currency. CBDCs could be put into place by letting people open accounts directly with the central bank PDF. This would give governments strong new ways to manage the economy. For example, stimulus payments and other benefits could be given directly to people, and the central bank's stamp of approval would make CBDCs a safe digital asset to hold. But experts say that putting them in place could also cause new problems by putting a huge amount of power, data, and risk in one bank and putting privacy and security at risk. Some experts say that the idea that CBDCs could replace commercial banks as middlemen is risky because commercial banks play a very important role in the economy by making loans and creating credit. If people decided to bank directly with the Fed, the central bank would have to either help people get loans, which it might not be able to do, or find other ways to add credit. Because of these things, some experts say that private digital currencies that are controlled are better than CBDCs. Recommended resources in this study: PDF from 2008, an engineer who goes by the name Satoshi Nakamoto suggests Bitcoin, the first cryptocurrency. Gary Gensler, the head of the SEC, talks about Bitcoin, blockchains, and money in this free class at MIT. The Economist looks at what could be good and bad about DeFi. Sarver Nauman looks at how the theft of cryptocurrency by North Korea could affect U.S. policy on the Asia Unbound blog of the Council on Foreign Relations. The Atlantic Council keeps track of how CBDCs are doing all over the world.